ASX profit season kicks off this week with expectations high as the market hits a new record. A cracking opening weekend of the home auction season and the most streamed show in 2023 across the US first ran more than a decade ago. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Monday, the 5th of February 2024. I'm Michael Thompson and good morning, Sean Aylmer.
Good morning, Michael. Very excited today. We really get things going again. We have plenty of economics this week with the Reserve Bank meeting tomorrow. We have Parliament back tomorrow. Just seems that the holiday is officially over and we're back into it.
We certainly are. And someone else who's excited is Matthew Kidman, one of our semi-regular guests. Always fantastic to speak to Matthew. He is your guest. He's from Centennial Asset Management, and you have an interview with him coming up after the show.
Sure do. All about the half-year earnings season, which we're about to kick off this week. Matthew is a very considered gentleman. He speaks very well about markets and things like that, but he's worth listening to because he doesn't ever just sort of fly from the hip. Matt, he really thinks a lot about markets. So if you're interested in markets, investing, any of that sort of stuff, certainly a must listen, Michael.
It certainly is, and I know I've fallen into the habit of describing everything as a must listen, but it's because they are all, in fact, a must listen. And we are not an investing podcast. You should always get professional advice before making investment decisions, but it is always so interesting hearing what an expert like Matthew Kidman has to say. So that's coming up a little bit later on after the show. And that is really what the main story is this morning. Half-year profit season on the ASX starts this week with pretty decent expectations about corporate Australia's earnings, pushing the share market to a record level on Friday.
What could go wrong, Michael? What could go wrong? Yes, expectations. It's not just about earnings, really. It's really about the outlook for 2024, and they're high in part because the economy looks to be avoiding a recession. Interest rates are set to start falling later in the year, and the global outlook is actually pretty solid, notwithstanding China. That's pushed the ASX 200 above 7,700 points for the first time, albeit briefly, on Friday. Must be said, volumes have been a little bit thin, so, well, markets are a little bit more volatile when volumes are thin, but we're kind of back to normal this week, so we're going to get volumes back as well. Some of the country's biggest companies, the banks, the miners, they might not be among the best performers this reporting season. Get ready for that. Only Commonwealth Bank reports among the big four. Its share price is trading close to record levels, but profit margins could well be on the way down, not up, and many professional investors think the country's biggest bank is overvalued. The miners probably won't repeat the earnings of 12 months ago because commodity prices are lower and ore competition is tougher. Mind you, the big iron ore miners are benefiting from strong prices of the ore. According to Macquarie Group, industrials earnings are tipped to be up sharply, helped by healthy price increases at the big general insurers and utilities. I'm sure anyone like myself who's recently paid a home insurance premium or a car insurance premium understand that premiums are higher. That's helping the big general insurers. The retailers have already said they're having a hard time of it. The healthcare stocks, they're the ones that will be watched really closely. They haven't done so well, and often healthcare and tech run together. They've sort of separated somewhat, and the tech stocks have done pretty well, not so much the healthcare stocks. So and Australia has a lot of really big healthcare companies, of course, led by CSL. So that sector will be very closely watched over the next few weeks.
Sean, you have explained to me multiple times, and it's usually after I say something that's perhaps a little bit almost simplistic about markets, and you explained to me many, many times that share prices work on what investors think is going to happen rather than actually what has just happened. So it means that the focus here is really on the outlook. And what is the outlook going to be?
The $64 question. Investment analysts reckon the second half of this year and into 2025 will be a period of recovery. Not exactly inspiring stuff. That's because interest rates are forecast to fall, and that should help economic growth. It means earnings growth will be steady, maybe 5% across the board. That's what people seem to think. There will be bombs. Domino's Pizza provided one a couple of weeks ago. Its share price fell 30% when it said that some of the economies it's operating in aren't doing so well, or at least sales in those economies aren't doing so well, particularly Japan and France. Earnings season kicks off this week. MCOR, AGL, Boral, Transurban, REA, bunch of property companies that are out this week, but things really pick up next week and the following week.
Now, Sean, we mentioned that local markets hit a record on Friday. Talk us through what happened on the day.
The S&P ASX 200 hit a new intraday high of 7,703.6 points, with the interest rate sensitive sectors, banks, real estate, technology stocks, those guys, doing best on growing expectations that the Reserve Bank will cut rates later this year. By the close, the market finished up 1.5% to a record close of 7,699.4 points. More than 85% of companies on the top 200 ended higher. That is what you call a broad-based rally. For the week, the market was up a couple of percent. Industrial property giant Goodman Group, it flew on Friday, jumped more than 6%, while WiseTech Global was up 3.5%. James Hardie ended up nearly 3%. Woolies and Macquarie Group also had strong days, as did all the banks, led by Commonwealth Bank, which was up 1.5%. Only 2 of the top 50 stocks actually ended lower on Friday: Rio Tinto and BlueScope Steel.
And what about international markets?
Well, Wall Street closed over the weekend at yet another record high, thanks to a massive 20% jump in Meta Platforms, the owner of Facebook, following better than expected earnings. Amazon was also up sharply, rising 8%. By the close, the S&P 500 was up 1%. The tech-heavy Nasdaq rose 1.7% at records. The buoyancy in US markets means investors are demanding more US dollars. That puts other currencies, including the Aussie dollar, under pressure. The greenback hit a 7-week high against a basket of currencies over the weekend, and the Aussie dollar suffered. It starts the week worth 65.1 US cents. Bitcoin rose over the weekend, just shows that people are prepared to take a little bit more risk. It's trading around 43,000 US dollars a unit. In commodity markets, oil fell for the third straight session, with Brent crude trading around 77 US dollars a barrel, and gold is steady around 2,040 US dollars an ounce.
This is going to be a very big week, Sean, and we've got a lot to get through today. We'll be back in a moment with the rest of the day's business news. Sean, Parliament is back tomorrow and the federal opposition is set to vote for the government's proposed tax cuts, with opposition leader Peter Dutton saying he will not stand in the way of lower taxes for Australians.
The final go-ahead is expected in meetings of the Coalition Party Room and Shadow Cabinet over the next couple of days. Media is reporting that Dutton won't announce the position until legislation is actually released. Coalition MPs and Shadow Ministers remain torn over how to best respond to the tax changes, which benefit 8 in 9 Australians compared to the already legislated Stage 3 tax cuts. Asked if he'd stand in the way of Labor's tax changes, attacked by the Coalition as a broken election promise, the opposition leader said, "I've been very clear that the Liberal Party is the party of lower taxes." That doesn't sound like someone who wants to prevent those taxes from becoming law.
No, I don't think it does. Sean, this is interesting. Car makers will be forced to sell more electric and fuel-efficient vehicles in the Australian market or face financial penalties under a new efficiency standard to begin on January 1 next year.
Climate Change and Energy Minister Chris Bowen says the new standard will bring Australia into line with all other developed nations, and it will make manufacturers subject to an overall emissions cap that their vehicles must collectively produce, or it's a limit, basically. And so if they put all their emissions together, they can't go over the top of this limit. The cap will be lowered each year, effectively acting as a carbon price, in that it will force the increased manufacture of cleaner vehicles and the phasing out of more polluting petrol and diesel cars. Under the model to be pursued by the government, both passenger vehicles and SUVs, as well as utes and vans, including large pickups, will have to reduce their respective emissions by 60% between 2025 and 2030 at an average annual reduction of over 12%.
Sean, it was the first proper weekend for home sales across the country, and really it was a cracker, wasn't it? CoreLogic says it is the second best starting weekend in 14 years of data.
Yes, I didn't expect this one. The national preliminary clearance rate was a touch under 74% from 1,671 listings, which is impressive, particularly given the number of listings is up about 25% on a year ago, and the clearance rate was 12 percentage points better than the first weekend of February 2023. It looks like falling inflation and the prospect of rate cuts later in the year has added a bit of momentum to the market. In terms of individual cities, Sydney recorded a preliminary clearance rate of 76.3%, the highest since the middle of last year. Melbourne was at just a touch under 72%. Brisbane was 68.5%. Adelaide came in at 77.6%. Michael, one weekend does not make a trend, but it is a very solid start to 2024.
Oh, it certainly is. Sean, Australian wine exports fell last year, hit by rising living costs across the globe, which isn't really that big a surprise, but also affected by a trend towards sobriety.
Yeah, who would have thought? Australia's wine exports fell by 2% last year, according to Wine Australia, and there was a shift towards cheaper bottles of Plonk. But it's the sobriety trend, which is good or bad, depending on your perspective. That's a surprise. Research shows that younger people are drinking less, and there's a drop in alcohol consumption in all regions except Asia, according to a report in The Australian. In Europe, which holds some of Australia's largest and most important wine export markets, 15 regions saw a decline in the value of wine bought from Australia. In the US and Canada, wine exports slumped 7 and 24% respectively. However, Asia came to the party, provided a ray of hope for Australian winemakers, where sales in Hong Kong jumped 74% in terms of value, and sales into Singapore were up just a touch. Of course, Australian wine was still effectively locked out of the China market last year. Hopefully that'll change in 2024.
The crippling waterfront dispute between the nation's second biggest container operator, DP World, and the Maritime Union of Australia is over. Sean, we've been talking about this for a long time now, but the two parties have finally reached an in-principle agreement over pay and rostering, which would see the wharfies get a 23% pay deal over 4 years and a $2,000 sign-on bonus.
Yeah, not bad. There's currently a backlog of 50,220 containers waiting to be either loaded or unloaded at DP World ports in Melbourne, Sydney, Brisbane and Fremantle, which the company said will take up to 6 weeks to recover, according to media reports. Now, after 3 weeks of unofficial talks through the Fair Work Commission, the MUA has agreed to stop protected industrial action that's been shuttering DP World terminals on a rolling basis pretty much since October, really. The new agreement still needs to be voted on by the stevedores, and both parties have agreed not to disclose the terms of the deal until after the vote. It does cover the next 4 years, though. We're pretty confident we know what they're voting on. But finally, it looks like an end to this dispute, which, as you said, has been going for months.
23%. That is, that's fairly significant.
It is, but if you break it down, it's probably, 8% the first year, maybe 7% the next, and then a couple of 4%. Given inflation, it's significant, so I'm not arguing that. And maybe transport costs will rise, which will feed through to consumer prices. That's also a possibility. But given inflation, it's not wildly out of the ballpark. That's what I'd say.
And I suppose there would just be a sense of relief that backlog of containers might start moving again.
I think so.
Now, turning to international news, US forces followed up strikes on Syria and Iraq with a new round of attacks against Iran-backed Houthis in Yemen, demonstrating really that President Joe Biden is willing to deepen US involvement in the region's spreading conflict.
The attacks over the weekend targeted Houthi sites at 13 locations in Yemen, according to Bloomberg, as the US and its allies escalate their efforts to destroy the militant group's ability to attack Red Sea shipping. Supported by 6 other countries, including Bahrain, the strikes on Saturday targeted 36 sites, specifically those associated with the Houthi group's deeply buried weapons storage facilities, missile systems and launchers, air defense systems and radars, according to the Pentagon.
Sean, US President Joe Biden won the South Carolina Democratic primary over the weekend in a canter, winning 96% of the vote.
Yeah, he hasn't quite got an opponent. It was, well, actually, officially he does have an opponent, definitely, but no one's serious. It was actually the first officially sanctioned race of the party's nominating season, and the 81-year-old president faced pretty much no one. Hence, 96%. You might ask, why didn't he get 100% if that's the case?
There are a few little questions there, yes.
More interesting, according to Reuters, was who voted. So turnout failed to exceed expectations, which was a bit disappointing for the Democrats. It's really interesting because 4 years ago, it was South Carolina's black vote in the state's primary that really helped ignite Biden's campaign and ultimately propel him to the White House. It just didn't seem that there were a lot of Afro-Americans voting over the weekend in South Carolina, and that's a bit of a red flag for the Democrats.
Finally, Sean, I mentioned this one at the top of the show. This is fascinating. Americans streamed 20% more content last year compared to a year earlier, with the number of shows and movies to choose from sitting at almost 1 million from over 90 streaming services. We are spoiled for choice. Well, at least they are in the US. We're a little bit more limited, but we're not far off that.
But 1 million, I mean, I felt good about this story because how many times do you sit there and say to someone, what have you been watching? Like, what are we going to stream? I mean, you and Sean sit there, or Jackie and I, what are we going to stream tonight? I don't know.
Yep.
What are we going to watch? No idea.
Yep.
There's a million shows.
Yep.
No wonder we're confused.
It's not our fault. It's not our fault that we are confused. It is the system, Sean.
Yeah, it is the system. It's the man.
The man's getting us down.
Yeah. And you know what the number one show was? This is what I think is fascinating.
What was it?
Suits. Suits.
Suits. So I don't understand that. Suits came out years ago.
2011 it came out, but it's only just come on to Netflix. It was it was on USA Network previously. It's only just come on to a major streaming service. It had 57.7 billion minutes of viewing time last year. 57.7 billion. It actually bettered the the previous best show of all times, which was Stranger Things in 2022.
Oh yeah, I get that.
And the third one was actually The Office in 2020. But Suits. Did I ever tell you the time I caught the plane? I got upgraded from economy to first class. I was flying LA to Sydney. And there's only 4 or 5 of us and I was just so excited. And I probably drank too much, as you do, because you're on the plane. Got through the whole trip. I just started chatting to this bloke. He was a friendly enough guy. Anyway, we're walking off the airport at Sydney Airport. He and I were walking down and someone came running up and said, "Can I get a selfie?" And I'm thinking, well, sure. And he said, "Oh, yeah, sure." And I went, "All right." And
it wasn't for you.
No, turned out. And so the guy took a selfie with the fellow I was with. And I said to him, "You're obviously more famous than I realise." And he said, "Yeah, we're from a show called Suits and we're out here on a promotional tour." I had absolutely no idea. There was 3 of them. Not Meghan Merkel, but the very unusual character. There's a very unusual lawyer. He was a guy, lovely fella.
It was the guy who plays Lewis Litt.
Yes,
I think.
yes,
So
yes,
I
yes,
remember
yes,
you mentioning this once.
Yes.
And there are so many things in this that I love. And one of them is the fact that you call Meghan Markle Meghan Merkel. That could be my favourite part of the story. But also the fact then that based on what we now know about how many people are watching Suits now, it may be the case that these guys, Lewis Litt and the rest, the actors who play them, were probably almost more recognised when they were in Australia than when they were in the US. If they were to walk down the street now, by the sounds of it, if people watching 57.7 billion minutes of Suits last year, then they're going to get picked up. They're going to get recognised and they're going to get selfies now in the States.
Yeah.
But maybe that was just the that were the ones kind of telling people, yeah, we're big in Australia at the moment.
Yeah. I just looked like an idiot. No matter how you tell that story, I looked like a fool. Hey, another part of this story, your all-time favourite children's show is a number 1 children's show in streaming networks, Bluey.
In the US, it has just gone off in the US. And deservedly so, because it is a fantastic program. And it's like, it is the greatest Australian export in years. And I'm not surprised, and I'm this won't surprise you, Sean, to learn that I'm a member of a whole lot of kind of Bluey fan clubs and things on
you're
Facebook.
Not, are you?
Yeah, of course. And there's like Bluey fan groups, like adult fans of Bluey and things, which now that I say that out loud, it sounds a bit weird.
Yeah.
But I'm not surprised, because
creepy.
there's a lot of no, it's not creepy. No, because the thing is, Bluey is one of those shows that you can sit down and watch it with kids, and the kids enjoy it on one level, and the adults enjoy it on another level or the same level.
Well, it is that good that there were 43.9 billion minutes streamed last year in the US.
Yeah, it is just absolutely taken off.
Yeah.
Any more stats for us?
Well, no, that's probably actually an interesting fact. Is that the older network shows are getting more popular. Like NCIS and Grey's Anatomy often populate the most streamed lists every year. Friends made a comeback last year, probably after the untimely death of one of its stars, Matthew Perry.
Yeah.
And the number 1, so all these shows aren't original shows. Guess what the number 1 streamed original show was on Apple TV? One of your favourites.
Not Ted Lasso.
Ted Lasso.
Oh, well deserved. It deserves that title. That is fantastic. All right, Sean, up next is the Fear and Greed Daily Interview. Matthew Kidman from Centennial Asset Management is your guest.
We ask him what he thinks is going to happen this reporting season. We run through all sorts of sectors, always well worth a listen.
Yeah, certainly is. That is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And after that, stick around as well for Fear and Greed the week ahead, featuring our resident economist, Stephen Kukula, someone who is very, very excited right now.
Oh, he's an enthusiast. He was actually recording from outside, so you can hear a few birds in the background, actually. But it's all about interest rates. The Reserve Bank meets tomorrow. It's a different setup for the meeting this time around. It's the first time they've got the new rules in place. So, yeah, Stephen's very, very excited.
Yeah, it's actually interesting to hear him explain kind of what those changes are and what it all means. It is a good chat. That one's coming up as well. Thank you, Sean.
Thank you, Michael.
It's Monday, the 5th of February, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, and Facebook. I'm Michael Thompson, and that was Fear and Greed Business News. Have a great day.